Welcome to Accounting Theory classes. I am Venkatmurthy SG, Assistant Professor of Commerce, Government First Grade College, Monkey. Topic of the session: Concept and Nature of Liability. Content of the session: Meaning of liability, Definition of liability, Accounting concept of liability, Features or characteristics of liability. Liability. Liability may be defined as currently existing obligations which a business enterprise intends to meet at some time in future. Liabilities are obligations resulting from past transactions that requires the firm to pay money, provide goods or perform some services in future time. Liabilities are the debts owed by the business entity to outsiders. Examples: amount due to suppliers, bills payable, loan from bank and unpaid expenses. Liabilities are obligations resulting from past transactions that require the firm to pay money, provide goods or perform services in favor of the loan provider in future course of actions. If a person accepts loan from other person, the first person is legally responsible to return the money to the second person. If a person buys some goods or assets or credit or accepts some services from other person, the buyer is legally bound to pay the money to the seller, or the buyer is supposed to make the payment equivalent to the amount which is taken from the seller of those goods or assets. Definition of liability. Accounting Principle Board of USA defines liability as economic obligations of an enterprise that are recognized and measured in conformity with generally accepted accounting principle, that is GAAP. Liabilities also include certain deferred credits that are not obligations but that are recognized and measured in conformity with generally accepted accounting principles. The Financial Accounting Standard Board defines liabilities are probable future sacrifices of economic benefits arising from present obligations of a particular entity to transfer assets or provide services to other entities in the future as a result of past transaction or services. According to Institute of Chartered Accountants of India, liability is the financial obligation of an enterprise other than owner's fund. Here we can clearly observe that the liability is anything which is taken from others except the capital invested by the owners of the firm or owners of the business. Accounting concept of liability. In balance sheet, we can represent liability as follows. The total liability equals to asset minus shareholders fund. Illustrative example for the accounting concept of liability. Find liability of the firm if total asset is rupees 15 lakh and shareholder fund, that is share capital and reserves, rupees 9 lakh. In this case, the liability can be calculated as follows. Liability of the firm equals to the total asset minus shareholders fund, that is rupees 15 lakh minus 9 lakh, that is the exact value of liability of the firm will be rupees 6 lakh in particular given situation. Features or characteristics of liability. Features of the liabilities are as follows. occurrence of past transaction or event. If there is a liability, then there must be some past transactions or events supposed to be taken place earlier. It may be any kind of business transaction, or it may be any kind of financial transaction or event. Required future sacrifice of asset. If a firm avail loan from any other entity or any other person, then that firm is supposed to be ready to sacrifice its asset in future date to fulfill liability requirements. Obligations of a particular enterprise. If any enterprise or a bank provide loan or extends liability facility to the any other business enterprise, then it is going to have an obligation on the firm which availed loan facility from the enterprise which extends the loan. Discontinuance of liability. Here, whenever the firm which took loan from another firm, then it has to repay the debt amount to the loan provider until discontinuance of liability will not be takes place. Once the entire amount of loan with respective interest outstanding are supposed to be repaid, then the liability will disappear from balance sheet of the company which availed loan, okay, in earlier conditions. Shareholders fund and dividend. Whenever shareholders provides fund to the company, they expect some returns from the company. Always shareholders have their right on profit, and the profit is given to the shareholders, or share in the profit is given to the shareholders in terms of dividend on their investment. Amount of obligation is specific in liability. In case of any kind of liability in business, the amount of obligation is specific, and the amount of the terms of obligation also supposed to be specific related with that loan or liability which availed by the business for its. Following are the references for today's session. Thank you.